Ladies and gentlemen, good day and welcome to Q3 FY23 earnings conference call of Alembic Pharmaceuticals Limited. We have with us today Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director, Finance and CFO, Mr. Mitanshu Shah, Head of Finance, Mr. Jaisal Shah, Head of Strategy, and Mr. Ajay Kumar Desai, Senior VP Finance. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti. Thank you, and over to you, sir.
Thank you, Yashasvi. Good afternoon, everyone. Thank you all for joining the third quarter results conference call of Alembic Pharmaceuticals. I'll start with the financials. During the quarter, our total revenue was up by 19% to rupees 1,509 crores. EBITDA was 236 crores and net profit is 122 crores. EBITDA margin for the 16%. For 9 months FY23, EBITDA was 476 crores and net profit was 189 crores. The company, like in the previous few quarters, continued to extend out previously amortized R&D in erstwhile Aleor, now Derma division, amounting to rupees 13 crore in the current quarter and rupees 144 crores for 9 months period. The company's profit before tax would have been higher by 13 crore in the quarter and rupees 144 crores in 9 months, and profit after tax would have been higher by 11 crores and 119 crores respectively before considering this effect. Residual intangible assets in books is now just 11 crores. Only 11 crores. Our consolidated profit before tax would have been 168 crores and rupees 382 crores for Q3 and 9 months period before considering above effect. EBITDA on likewise basis for 9 months FY23 would have been 574 crores, which is 14% of sales. EPS for the quarter before non-recurring at 6.76 per share versus rupees 8.74 for the previous corresponding quarter, that is Q3 of last year, while for 9 months it's 15.68 per share versus 25.39 in the previous year. Our borrowings continues to be in almost the same zone. As on 31st of December, it is 686 crores. As on March 22, it was 630 crores. But we have a cash on hand of 146 crores. March 22 was 61 crores. So net debt equity gets further improved to 0.10. Now I'll request Shaunak to take you through the India business presentation. Shaunak.
Yeah, thank you, Mr. Baheti. Good afternoon, everyone. For the quarter, I think we continued with the same level of performance. I think we had a top line growth of 12% with 5.
Ladies and gentlemen, we lost the connection of Mr. Shaunak Amin. Please stay connected while we reconnect him. Ladies and gentlemen, thank you for patiently holding. We have Mr. Shaunak Amin back on the call. So please go ahead.
Okay, so we did 545 crores for the quarter. As the IQA IMS numbers, industry grew by 10%, and Alembic reflected a 15% growth, which is again in line with outperformance compared to industry. On the specialty segment, our performance was significantly higher, and we recorded 14% growth versus a 10% growth for the industry, largely driven by three key therapies: gynecology, anti-diabetics, and ophthalmology. On Q3, the acute part of our business grew by 21% versus industry growth of 11%. And within that, I think the two key components of anti-infective, we recorded 24% versus 12% for the industry, as well as in cough and cold, which is another large important segment for the industry, for Alembic. We grew by 16%, with industry growth of 10% as per the IMS. Animal healthcare continues to run a strong performance by recording a growth of 19% over last year, Q3 internally. I will hand over the discussion to Pranav for his comments on the international business.
Thanks, Shaunak. The US business, as you all know, it continues to remain challenging on account of the competitive intensity, but we did manage to grow the business 10%. Some of it was led due to the current strong flu season that we saw in the US market. Our goal is to work on improving the efficiencies and execution in the midterm. We're looking at cost reduction as well as reducing R&D grid going forward for the US market. R&D expense is 157 crores. X of the one-time Allure product write-off is 144 crores, which is 10% of sales in the quarter. Whereas for the 9-month period, R&D expense is 586 crores. And X of the Allure one-time, it is 442 crores, which is also 10% of sales. We filed 4 ANDAs during the quarter and cumulative ANDAs at 246. We also received 9 approvals in the quarter and cumulatively have 178 ANDA approvals. We launched 2 products in the US and plan to launch another 2 in the fourth quarter. In terms of regulatory agencies and compliance, the US FDA conducted an inspection at our Concall facility, F2, and issued 4 observations. We have replied to the observations already and sent our responses. After that, we have already received 3 ANDA approvals from this particular site. The US FDA also inspected our new oral solid dosage facility, F4, in December. They issued 5 observations. We have sent in our responses, and we have already received an approval for 1 product from this facility. In terms of the pure numbers, as I mentioned, the US generics grew by 10% to 432 crores for the quarter and 10% to 1,200 crores for the 9-month period. In dollar terms, we were at $52 million, which was a growth of about 1%. Ex-US generics grew by 7% to 206 crores for the quarter, and it grew by 3% to 602 crores for the 9-month basis. The API business had a good quarter, robust quarter, and grew by 65% to 326 crores for the quarter, and it grew by 19% to 853 crores for the 9 months. What's important is both the ROW and the API business have both come off a strong base of last year, hence it's been a decent performance in these verticals. Would now like to open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wants to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks, and good evening to all. First question on, you had some 7 to 9 approvals and there are 2 launches. So, are we waiting for the launches for the new facilities, or we have already started launching in Jan to March quarter? And if so, the expenses quarterly run rate would be how much?
So, Prakash, from the new facility, we haven't launched as yet. We will launch from one of the facilities in the quarter, hopefully this month, and the rest are in progress right now. So we will see from F2, the Onco facilities where we will launch this quarter.
Okay. And this diclofenac product is from, have you launched this and from which facility it is?
So diclofenac is an Allure product, and we haven't launched it as yet. It should be in the next couple of weeks that we'll launch it.
But can this be sizable on our base?
It's a decent product. As far as I believe, I don't have the exact figures with me, but it's a good product and it's a decent opportunity.
Okay. And what would be the quarterly run rate since, we would start, Allure is already on, I think, in terms of expensing, but a couple of other facilities also, I understand they will start expensing out, or?
So up to 31st of December 2022, no expense was charged off. It continues to get capitalized because now the commercialization of these facilities will start from this quarter onwards, and we will start charging off as and when they get into the commercial production. But as was informed by Mitanshu earlier multiple times, our annual run rate on all these facilities is about 200 crores.
200 crores, all the facilities put together?
All the facilities together, yeah.
So, but it would be not fair to understand that it would be a 50 crore kind of cost every quarter. It will be in tranches before it touches the run rate of 50 crore, right?
That's right.
Okay.
And Prakash, Ms. Vaidhi is talking about cash expenses here of 200 crores, and there will be another depreciation on that.
Yeah, operating expense and the depreciation on the overall gross block.
Yeah.
And this gross block pertains to how much? Is it in the range of 2,000 odd crores?
So we have about 1,200 crores of would you say hard assets, and the rest is pre-op expense, accumulated pre-op expense.
Okay, understood. And this product also, this pregabalin also comes from Jarod. So that also you're awaiting EIR, or it should be ready for launch for this quarter?
So pregabalin is a product that we are already selling currently from our existing facility, the F1 facility. It's already a commercial product. This was site transfer that we did from here. So we'll just decide when to start commercial operations from F4. We'll probably bundle up a few products together and then we start the commercial operations.
Yeah, so there's no hurry there. Okay.
Yeah, there's no hurry there, yeah.
Okay, and lastly on the, the API piece is doing fairly good. So you mentioned that fiscal 23 there is sufficient visibility. If we want to look at beyond, then how does it look?
So this quarter is a little lumpy because, as you know, we do CMO business for a large MNC, and sometimes those orders come once in a while. So that was a big chunk of that order came in this quarter. But ex of that also, there's been a growth of about 30-40% if you take that part of it out. But on a year-on-year basis, as I've been saying, the API business should grow at least 10%, 10 to 15% for the year.
From fiscal 24,
I think we're seeing that trend. I'm seeing that. So even next year, you'll see about it. I would expect at least a 10% growth in the API business.
Okay, but this run rate is possible in Q4 also?
No, it won't, because as I said, it's still lumpy. This one big business that we had, and there were a few more dispatches in this quarter. Sequentially, it is, if you take the one off, it's still lower than last quarter.
Okay, but Y&Y growth is possible?
Yeah, absolutely.
Lovely. Thank you.
Thank you. We have our next question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, good evening. Thank you for the opportunity. My question is for Pranav. So you mentioned in your opening remark that due to persistent challenges in the US market, you'll be more efficient in R&D cost going ahead. So what is your thought process here? Because right now also we are spending around 10% of top line towards the R&D. So how or where you can bring efficiencies, and if you can also tell us like what kind of returns you are seeing over for investment which were done say last 4-5 years back. That's my first question.
Yeah, so two things. One is what we're doing is the R&D spend. We're trying to optimize the projects and that we have in terms of R&D, in terms of short term, the issues that we're facing in the US market. So some of the high risk projects is where we are putting on the back burner. At the same time, we're also increasing some of our projects for the ROW markets because there we've been doing pretty well and consistently growing at about 10% for the last few years. So we will start adding projects there as well. In terms of ROE, just do you want to talk about the return?
So on a percentage basis, couple of quarters back, or I think last year it was about 13% of sales, which has come down to 10%. But also that's not a right reflection because sales has not, sales is a depressed sales, if I can say so, because of the US situation. Volumes have gone up, but the price realizations are low. In absolute number, in spite of all these cost increases, inflation, we have reduced the expense, and I think we will further prune the projects and prune the fixed costs. So that effect or that impact would come in 23-24. That's what Pranav wanted to convey.
Okay, just a clarification.
It's very difficult to do that ROE analysis of R&D because okay, couple of products can take care of the entire R&D expense, and but you are right. I mean, many of these new launches which we have done in recent past, except a handful of them, have not been great success because of the price erosion.
Okay, sir, that's helpful. Just wanted to check any number in your mind, like where you would like to bring down your R&D as percentage of sales, say 3 years from now?
So like the scale up takes time, even the pruning takes time. You need to do it carefully. But I think, okay, we can target a reduction of 15-20% from the current cost in the next year.
Next year itself, 15-20% reduction can be seen on the R&D cost from current level. Okay. Baheti sir, just one clarification on amortized residual R&D for Alere. So you mentioned it's 11 crore is remaining, which will be done in next quarter or so, and after that nothing is left on the Alere.
Yeah, that's right. You are right.
Okay. My second question is on input cost pressure. So can you comment like what are we seeing in terms of pricing trend for raw materials, feed costs, etc. Compared to last few quarters?
So in international business, we have not seen a significant increase in raw material cost, but as a percentage of sales realization, the cost has gone up largely because, as I said, largely because of erosion in prices. In domestic market, as far as this quarter is concerned, they are pretty stable. They've still not gone to the pre-COVID level, but I think they are stable or has come down a bit for the domestic market.
And my last question is on India business. So most of the therapies you have seen outperformance versus the market, except gastrology. So anything specific to call out there? So
Shaunak, would you respond or you want me to continue?
Yeah, could you? I didn't understand. My network is bad here.
Sorry,
you're not audible, Damayanti. Can you use your handset, please?
Yeah, so I was just asking, like, anything specific on the gastrology segment where we have seen as a slower performance versus the market growth?
Shaunak? His line is also a little disturbed. So you are right. I mean, you are very correctly observed. Gastroenterology is the only probably division, large division where we have done worse than the market and worse than our own expectation. There were some leadership issues. There were some inventory issue of the old times. We have done all these corrections, and we expect that 23-24 should be much better year for the division also.
Okay, sir. Thank you. I'll get back to the queue.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Yeah. Thanks for the opportunity. So just clarification first. So the one-offs that has been called out with respect to Alere, right? Only Alere. Or is there anything else? I joined the call late, so if you could clarify.
No, it's only Alere. That's only 13 odd crores this quarter.
Good. And so secondly, there's among the peer set, the couple of companies have got significant regulatory issues, and that has to some extent led to shift of the supplier base, particularly on the injectable side. So are we going to see a good business benefit out of it? I mean, historically, we definitely have tried to do a good benefit of such events. So anything going forward?
Yeah, so it's a good question. I think strategically where we've done well is when there are regulatory issues in the industry and that leads to shortages, and we've been able to do well on the shortages when we do see it. Injectables is still early days for us because it's just we just got the first few product approvals. Once we commercialize it, and then once the rest of our portfolio and our filing speed picks up on injectables, yes, definitely we could see that. Strategically, one of the reasons we did get into injectables is because there has consistently been shortages and compliance issues, so we thought there would be opportunities. So long run, yes, we do hope to see some.
So anything over next 12 to 15 months, given that, or let me put it other way, given the current quarterly run rate of 50-52, how do we see FY24?
So it's tough to say right now. I think the whole thing depends on how the new launches go. Like this time, as you've seen, we've got about in rupee terms a 10% growth. That's predominantly because while we had erosion, in the quarter compared to last year, but we also had some new launches that picked up some steam. So it's a combination, and with injectables, as we launch more and more injectables, I'll keep adding to our basket. Of course, FY24 will be a little tougher one because we will have a little bit of a pressure on the profit due to the 2 new facilities coming up on stream.
Understood. But that is because of taking the expenses from balance sheet to P&L, but the opportunities on the US side remains promising.
Yeah, that remains.
Yeah, for the next 12 to 18 months.
Yeah, absolutely.
All right, so that helps. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. Participants are requested to press star and 1 to ask a question. As there are no further questions, I would now like to hand the conference over to Mr. R.K. Baheti for closing comments. Over to you, sir.
3 questions.
Hello. Yashashri, there are 3 questions.
Yes, we just received it. I'll take them. We have a question from the line of Rahul Jivani from IIFL Securities. Please go ahead.
Yeah. Hi, sir. Sorry. Allow me for a bad throat, which I am running. But sir, with this rationalization in R&D expenses, which you are targeting for next year, do you think that you can offset the incremental operating expenses from the new plants through this R&D rationalization, which you are talking about? And then, given that scenario, how are you looking at your EBITDA margins over the next 2-year period?
So I think no projections or no estimations, internal estimations which we are doing are holding valid for more than 6 months. So difficult to give any answer, but yes, wherever possible we are trimming our costs. R&D, even in operations, wherever there is a possibility, we are trimming our costs.
Sure, sir. And
for the new facilities, the expense will start hitting the P&L.
But do you think that with the rationalization in R&D and the fact that the API prices were also on the higher side this year, and some of those benefits coming into next year, you will be able to offset this impact of the new facility costs?
So, very difficult to make a comment on this, on the EBITDA side.
Sure, sir. Otherwise, if you can just comment on the fact that have you started seeing any benefit from the API cost moderation?
So Rahul, I think in terms of immediate term, it's a little tougher to say. Mid-term, definitely yes. We'll see all this offsetting whatever the additional cost. I think FY25 will be a lot more comfortable, in my opinion.
Sure, sir. Thank you. That's it from my side.
Thank you. We have our next question from the line of Chirag Dagli from DSP Mutual Fund. Please go ahead.
Yeah, sir. Thank you for the opportunity. Am I audible?
Yeah.
Yeah. Oh, okay, sir. Thank you for the opportunity, sir. What do you make out of this situation where we have product approvals but EIR is not in place? It's quite a unique situation. What is your reading or sense of what is happening here?
So my reading of sense is that, listen, FDA is keen to approve facilities. As far as they see it, they feel that all responses are in place. They feel there's no risk to anything, hence they've given it. The EIR, they're waiting for a formal EIR. I think we've seen this not just the first time, so we're seeing it because they want us to launch products in the market and they want new facilities. So that's one of the reasons.
Understood. So you're not worried around, potential of EIR coming through?
No, then they wouldn't have given the approval also.
Understood. And sir, do you see over the next 2 quarters, do you see products getting launched from all the new facilities that we have, onco injectables, the new oral solids block?
Yeah, so not the new oral solids block. That I mentioned earlier in the call that we will decide when to do it because that's with a few approvals bundled up, then we'll do that. But I think the first two that will go off the block will be the onco injectables, and then the second one would be the general injectables. Those two we will start. Those two are the big ones. We will start seeing those commercializations, one in this quarter, one next quarter, I believe.
Understood. And sir, can you quantify the number of pending approvals from onco injectables and the general injectables?
Yeah, just let me touch on this. So we haven't given plant-wise, we haven't given a breakup of our injectables. I can give you just the absolute amount or offline. I don't have the figure with me.
Understood, sir. But sir, is it fair to say that over the next 12 months there will be a lot of bunching up of approvals?
So yes, there would be some bunching up, and hence that's why we've seen two approvals in F3 and one in F2. But it could have been bunched up more, but I think last year due to the compliance and the remediation, our filing pace also slowed. But hopefully moving forward the next 24 months, we'll see a lot faster approval rate there.
Understood, sir. Okay, and sir, on the two Formitrol products, our Formitrol, I can see we have a double-digit market share in Formitrol. Is that also an indication of what we can get in our Formitrol?
Yeah, so Formitrol, yes, we picked up some decent share. Our Formitrol we will be launching shortly. It's a CMO product, so we're just waiting. We should launch it shortly in the next quarter or so, hopefully.
Understood. And for both these products, the margin profile is reasonable given that these are manufactured not internally.
Yeah, it's a decent product.
And we can stay in the market even if the market becomes competitive.
I believe so.
Very hypothetical.
Okay. Understood, sir. Okay. And the last question is this Aleor 13 crores, in which line item in the financials is it recorded? Other expenditure or
respective, what you call account heads, so employee cost and other expenditure will be the main two items.
Understood. Okay. I am done with my question. Thank you.
It is in amortization / depreciation.
Thank you. We have our next question from the line of Harith Ahmed from Avendus Spark. Please go ahead.
Good evening. Thanks for the opportunity. When you guided for a 15 to 20% reduction in the R&D spends next year, does the base of FY23 include the amortized cost from Aleor, the 140 odd crores for 9 months FY23? Or
no.
Are you excluding it from the base?
If I take that, then the reduction will be far higher. No. So we are looking at the regular recurring expenses and saving from there or reduction from there.
Okay, understood. So, Pranav, a couple of years back, you had set an aspirational target.
But can you use your handset, please? Your line is not very clear.
Okay. So, I was asking about this $400 to $500 million of targets that we had set for ourselves in terms of US sales. Do we still maintain that guidance, and if so, any timeline by when we'll get to those levels?
So when I used to say that, I used to also give a disclaimer that this is a company historical companies or our peers in the industry which have embarked on this have seen this kind of a growth, and we could also see it. And the number was over 3 to 400. It was really optimistic. 400 could go 5. The 3 to 400 million, I still stand. 500, no. I still think there could be an opportunity to go to 300 million plus. But as you see, everything's got pushed back by about 2-3 years. So because of the delay in the execution of the new plants, and the pricing erosion has increased, has reduced some of the outlook. But I still believe that 3 to 400 million is still a potential in another 3 to 4 year period.
Okay. And lastly, just to confirm the timelines around commercial supplies from 3 new facilities. For the Concall facility, you said we will start supplies this quarter, and for Jarod probably later beyond FY24.
Jarod is maybe I'm not FY24 or even beyond. Maybe we'll just see how it is. What makes sense for us if the products are bundled up, whether what kind of load is there on the F1 facility. And the injectable, the other general injectable is what we will see next quarter onwards.
Okay. Got that. Thanks for taking my question.
Thank you. We have a next question from the line of Tanmay Gandhi from Investec. Please go ahead.
Hi, thanks for taking my question. Am I audible?
Yes.
Yeah. Sir, can you highlight the key reasons for growth in US? We have seen some bit of sequential recovery there.
Yeah. So I mentioned earlier in the call that two reasons why we grew in the US. So on one hand, you had price erosion in the quarter as well compared to last year on year. So that was quite a bit. But in spite of, because we had some sartan sales in Q3 of last year. But what happened is this time, as I mentioned, there was a strong flu season. So some of the anti-infectives and oseltamivir is Tamiflus where we had a decent opportunity. And the second one is we had some new product launches where we picked up some share. So that's where both those put together has caused has given us some growth. One thing I have not mentioned though is in the US business on a volume terms, the growth is much higher, but because of erosion, it's only about 10% in rupee terms.
Right. And for other companies as well, we are seeing some bit of sequential improvement, right, in their base business, right? And so are you seeing some bit of, stabilization in price erosion, and, what would be your price erosion excluding sartan?
So excluding sartans, the price erosion is still there. I wouldn't say it's gone away. It's still there. It depends just on which product and which company. It's still there. It's maybe slowed down, but it's still around. I don't have the exact figure because it just keeps changing. So it's still there though.
Any broad number which you would like to do?
No, it's very tough to say because what's happened. The customers are bidding out the products a lot more often, and so hence we're seeing a lot of erosion there.
Okay, so broadly for industry in general, are you seeing some bit of stabilization, some bit of improvement in price erosion versus last 2 quarters?
No.
Okay, thanks. Got it.
Thank you. We have a follow-up question from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi, thank you for the follow-up. My question is again coming back to approvals from the plants F2, F3, where we are yet to receive EIR, but we saw some approvals. So are these products in shortage? That's why FDA gave approval before we get the official clearance, or as you said, FDA is more keen on approving new plants, and that's why we got some approvals.
I'm not sure, to be honest. So they are not all in shortage, the products. One of them, F3, has been on and off in shortage. The other ones are not in shortage. Well, one of the other ones is possibly in shortage. But I think it's just a matter of the audit and the audit kind of report that was given and our responses, I believe.
But you're confident you should be getting the official closure very shortly, and then that will maybe boost number of approvals from the plant, as you mentioned, was some bunching up, etc.
So we're already getting approvals from the plant as we go along. So whatever's pending, we're getting approvals. As we file more products, then we'll do it. So yeah, but it seems okay because we haven't heard back anything from the FDA. They've received our responses as well, so we haven't received back anything from them.
Okay. And my second question is, can you comment on the pricing situation for your derma portfolio? Because I think last we heard it's very severe. So anything incremental there?
No, we don't talk product portfolio-wise pricing on any of the other, on anything.
But overall, as you said, not much change in the pricing situation compared to last 2-3 quarters trend.
No. I said there's still enough erosion. I said nothing has changed. There's still as much erosion as before.
Okay. Same as what it was, say, a few quarters back. That's what you're...
Yeah. So if sartan's erosion is 40%, the regular erosion must be 10% or so.
Okay. Understood. Thank you.
Thank you. I would now like to hand the conference over to Mr. R.K. Baheti for closing comments. Over to you, sir.
Yeah, thank you. Thank you everyone for joining the call. It has been a tough day for you, analyzing budgets and then attending conference calls. So still thank you for your presence and for your interest in the company. And we'll stay in touch. Have a good evening. Thank you.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.